Well, I mean, given that now we're entering this sort of new era of soft new normal of above $70 a barrel, it certainly bodes well for a lot of the fiscal finances, a lot of the OPEC countries. Now, of course, the next OPEC meeting in June is going to be critical because that's when they gave guidance to us in markets towards the end of last year when they rolled over the agreement for another 12 months with the break in, in June, is for them to actually reassess the supply and demand balance. I mean, that was their key mandate, to actually get markets back into balance. And now, of course, they've been very successful in doing that. So, of course, with the prices at where they are and with markets balanced, a lot of the OPEC members would like to, of course, roll over the agreement, given that any additional supply that comes onto the market will certainly lead to a potential downward move in oil prices. So my expectations is that certainly a rollover until a continuation until the end of December is certainly on the cards.
But Ehsan, when we look at what's happening, particularly between the leader of Iran and the United States, lots of talk about these U.S. sanctions and whether or not a new deal will be put in place, what that could look like. How worried are you that this is something that we're going to see pop over the next couple of months?
Certainly. I mean, this newly highly geopolitical tensions between the US and Iran, it certainly does not bode well for all markets. I mean, I think our base case scenario is that Donald Trump will not sign the nuclear waiver agreement on the 12th of May. Certainly, he has been articulating that in tweeting policy, as well as through other statements that the administration has made. And if we have a look at the current hawkish setup of the US administration with Mike Pompeo and John Bolton now, firm hawkish members of the US administration, we think that a resumption of certainly some shape or form of sanctions on Iran could take place on the 12th of May. I mean, of course, we've had the French president there trying to sort of reason with Trump and trying to see if they can actually come to some sort of new deal. We have Angela Merkel coming next to Washington to see if she can do something to actually get Donald Trump back onto a bit more of a accommodative stance on Iran. But we think that given where the administration is in terms of trying to push restrictions back on Iran, we think that at least 250 to 350,000 barrels of Iranian crude could be at risk of disruption if sanctions are brought back into place. And we think, of course, in terms of upside risk to oil prices, anything north of Brent above $80 and WTI above 75 could firmly take place, because we think that markets have not really fully priced in, because the articulation of the size and the magnitude of Iranian sanctions has not been really given to us in markets. So markets have not really fully priced in how much sanctions could impact Iranian crude.
Let me take the counter-argument. Let's say that the Trump administration does give Iran a pass this time round, and they come out with some moderate rhetoric. There is so much positioning in the market, in the futures market, on the long side, that could lead to quite a nasty unwind in the price. Is the risk fairly asymmetric then?
Yes, I mean, if you look at more, as you say, as you rightly point out regarding the futures curve, more on the medium-term horizon, we are very structurally bearish in oil prices. Indeed, if you look back at the fundamentals and move away from the geopolitics, there's a lot of although the market seems to be fairly balanced at the moment, we think given the very strong upsurge in US production, primarily because of shale growth, we think that markets could be potentially caught in oversupply in the more medium-term horizon. Indeed, our own base case forecasts are for Brent and WTI to average 64 and 59 on average this year. And we think because at the back end of this year, once the geopolitical tensions potentially ebb out of the market, markets will focus back on the fundamentals. And given the very sharp surge in US production, we think that this could cause a re-emergence of an imbalance in the back half of this year, with certainly downward pressure on oil prices towards from the summer months onwards.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.